some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house. Oh yeah. Let's get some noise in this house.
And they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women you losing, do this shit for yourself. I do this shit for myself.
Style is the bomb, daddy bomb.
Real man of genius.
Today we salute you, Mr. Daily Profiler Statistician.
Mr. Daily Profiler Statman.
While others guess where the market might go, you crunch the numbers, projecting highs and lows with surgical precision.
The high of day, low of day, you've got them dialed in.
London Open, you've measured it New York over under. You've tested it Asia range. You've logged every tick since 2018.
No lagging indicators for this guy.
Only you can say Based on the last 47 days, there's a 63% chance the high of the day forms before 11 a.m.
Probability never sounded so small.
So crack open a cold one, because trading isn't luck, it's statistics and a really big spreadsheet.
It's Mr. Daily Profiler Stockman.
All right. Good morning, everybody. Good morning. Good morning. Good morning. What's up, Mickey? You are muted, my friend. Here, let me get you. There you go.
Good morning, brother.
Good morning. How'd you guys like that? We got the Amazon couldn't hold us back, ladies and gentlemen. All right. We were planning on releasing that the official Daily Profiler commercial last Monday, but AWS had other plans. Good morning, guys. Morning, Maz King. Morning, Ape In. What's up? What's up? Good morning, Max. Let us know where you are watching in from. Are you trading this morning? What are you seeing? What are you trading if you are trading in queue like all of us? Good morning, Wes.
Give me a comm check in the community. Can y'all hear me okay? Because I just turned my AirPods on.
You sound good for me. Revenge of the summer markets. Good morning, bro. Morning, Dale. Hey, we don't joke about that anymore, right? Gave us a black eye. Good morning, Scotty.
Right now, when the fall autumn markets.
Yeah, dude. When the leaves start to fall, guys. When the leaves starts to fall, the markets move clean. It's a trigger to the algorithm. They're connected with the weather. Morning, Matrix. Morning, EP. Let's do what we do. Good morning, Drez. Morning, M. Barks. You guys like the song? Yeah. We got a lot of people like the song. Good morning, Max. Morning, Chitaki. Good morning, Brooke. One of the sweetest ladies I have ever freaking met on the internet. Good morning, Zay. Shout out to Zay. Zay runs with Drez and Q. Holy mother of the Lord. And there she blows.
And she's off to the races.
And this is why we were procrastinating and waiting for this news candle to be done.
Welcome to all the new boot camp members that started the boot camp on last Saturday.
Yes. That's a 180-point news candle.
Yeah. As we let this as we let this news candle, do its thing, right? Like, let's get some feedback from the boot camp members. How's it going so far?
Look at that candle. Yep.
That's crazy.
Baltimore, Maryland? Dude, we were neighbors like 4 years ago, 3 years ago. Candlestick stalker.
PG County, Maryland is where I'm from. I grew up in French Georges County, Maryland.
How close is that to Pasadena? That's where I used to live when I was stationed there. Pasadena, Maryland. And
about 30, 45 minutes.
Dude. Yeah, we'd go to Baltimore all the time. For those of you that's just tuning in, if you're tuning in for the first time, why do we do these streams on Friday? So on Friday, just to start recap this. So on Monday, we do free live streams where we trade live in front of you guys, attaching statistics with live price with the tools that we use and teach every single day. Then on Friday, we do just the analysis and wargame portions. So if you go over to Mickey and I's Twitter, you will see that we wargame Monday through Thursday. So I'll do a write-up on Twitter. Mickey does a video version, and I'll link it under my
You there, Austin? Pocket, are you hearing Austin? Y'all hear me? What about me? Can you hear me? All right, cool. I'll just take over. All right. So yeah, what he was saying is like, so what we offer in the pack is we do free live trading between 8:20 and 11 on Mondays. On Fridays we do wargaming, and then we go to community live trading every day, Tuesday through Thursday. He'll do a write up Twitter of our war game, and I'll do a video version of the wargaming. And then we trade within the community. So make sure you check that out. If you get value from the tweets or the videos, make sure you like and share it with your friends. And yeah, like just trying to bring more awareness to, you know, how we line up live price with historical data, right? And how we do it. All right. So while we wait for him to come back, right? Some freaking things that I usually do at 5:30 in the morning, right? 5:30 in the morning, I do candle signs, right? Which is taking, oh, shoot, you're back. Now it's on his screen. Austin, you there?
Oh, my bad, dude. Sorry, it logged me back in. There you go.
Okay, there you go. I'll start today and then we go. So
Yeah, no worries.
so what candle science allows us to do, right? From whatever time frame, if we want to do 10 candles back or 3, right? If we want to use the daily chart all the way down to the 45, all the way up to the monthly, right? All we're doing is using a set number of candles, right? So this would represent the NASDAQ daily candle using Wednesday and Thursday to give probabilities for Friday, right? And then we're currently in the process of syncing this to live data, but for now we have to actually go through and click the OHLC data to get the probabilities for the OHLC on this day, right? So this morning, or actually at 1800 last night, we had a 69% probability that this was going to be a green day, right? Because of based off of what Wednesday did, based off of what Thursday did, right? Gave us a 69% probability of a green day. Based off of where we opened, right? We can see that there's a 58% probability of closing above previous day high. There's a 70% probability of us closing above previous day settlement, right? There's a 78% probability that the low of the day would be above previous day open, and 93% probability that we'd close above that. And then there's an 88% probability that the low of the day would have been above previous day low. And there's a 97% probability that we'd close above it, right? So that gave us the open using Wednesday and just Thursday, right? Gave us the probability that this is the stats for the daily, right? If we wanted to do that for a lower time frame, we could, but that's the stats for today, right? So all things are pointing to a very bullish candle, right? Which, as you can see, happened on CPI, right? So now what we're going to go through is we're going to go through I just use it for the daily, and then I'll also use NFP Friday and previous month 50% or above both of them, so we anticipate higher prices. It's that simple, right? Now we're going to go use the daily profile. We're going to say, based off what Asia and London has done, right? What is the probabilities of, you know, New York 1? We define New York 1 as 7:30 to 11:30, and New York 2 would determine how the afternoon session goes, which goes from 11:30 to 1600, right? And so now, right, we see that Asia was bullish and London was bullish, right? So we know that that sets up for a firecracker, right? So a firecracker meaning that we had a trend market overnight. So we need to identify which probabilities to the downside. In this case, as we've already done this because of the news candle, but usually it's during the 9:30 that we do this, right? That we retrace to these levels and let my trading view unglitch itself, right? So a couple probabilities that we'll look for. We're always going to look for London OU, which is the midpoint of the 230 to 330 range, and the Asia OU, which is the midpoint between 1800 and 1930, right? And now we're going to pull up our data so we can actually see that. All right, so we're going to come over to the daily profile. We're going to put long true, short false, right? And we can see that that midpoint Asia has a 75% probability of being broken, with majority of the time the mode being at 9:30 to 9:45. Obviously today was a news candle, so the timing of it happened a little bit differently. It happened during this 8:30 to 8:45 area, and we can see that London typically happens at 7:30 to 7:45, but today it happened at 8:30, which is this where the median is right here. 50% of the data is this way, 50% of the data is this way. But the secondary mode is at 9:30 to 10:30. We've already hit this, right? So we've already fulfilled this 87% probability, right? And that's without even determining what New York 1 has done, right? So if we look, right, this is that London OU line that we hit, right? So right now, the answer, so now, right now, what we have to figure out is this, which I'm going to go on and assume, but we don't assume anything. Is this enough netting for the daily candle? Because now we know, like now we're going to figure out, are we in the body of the daily candle or the wick of the daily candle? And that's where the high day, low day data is going to come in, right? So we can come over here and we're going to say short false, because in New York 1, because that's what we did, right? If you look right here, the 7:30 to 8:30 that we pulled data from, it went short first and then breached the other, which we identify as it broke out to the downside short, but it was false and took out this high, right? So that's what happened, right? So we're going to select that for this, right? And now we're going to come down to the high day, low day, right? And yes, the answer to the test is obvious now because the news candle happened already, but on most days it doesn't operate like this. But we can see that that 1800 was the low of the day, right? A solid low of the day, right? So that 1800 is low of the day is supported. And now we can anticipate end of day, high day, right? One thing that we want to look at is the P12 levels, the different levels that we have, right? Now we can see that there's time-based probabilities that we use, like midnight, Globex, settlement, and they're structure-based, like previous day high, previous day low, previous day mid, previous 12-hour high, previous 12-hour mid, previous 12-hour low, right? That we can start building zones towards to identify as targets or decision points, right? Of where we are in the daily candle, right? So we've already identified that we are in the body of the daily candle. So if it wants to blow off, the Asia OU, the Globex, the settlement, all that, it can. But we can't blow it off because we still have to put probabilities on here because we know news candles do like to get retraced, right? And then the move happens. Now we don't think that we need to make a new low of the day. Statistically says this 1800 low of the day is statistically sound, right? And even so much that we can also say that structure is almost statistically sound, and I'll show you that right here, where based off of the data, we can see that the next 3 hours are going to be bullish. We can definitely start experiencing some range at 10 o'clock, the 9:30 to 10, 11 o'clock, even all the way to 11:30. You can start seeing some of the range, but overall it's bullish, right? But we still need to identify the one thing, right? Are these probabilities going to get blown off today, right? And so we can see that under these variables, All right, the settlement, Globex open, midnight, right? Does Globex open has a 58% probability of being hit. When it does get hit, it gets hit between 9:30 and 9:45. We're going to go in and say that that's more than likely not going to get hit today because it's synced with this Globex open. I mean, this P12 low, which is supporting the low of the day. So this area right here and below, like, is kind of off of our radar, right? What we need to see right now is there a possibility for P12 mid and midnight open for us to retrace this whole news candle, come down to here and then bounce? Because we've only put 247 out of 492 in for the day. And this is just looking at the worst case scenario. Like, we don't want to trap our brains into thinking we're just going to rip the rest of the day, because there are probabilities of the downside. We're just wargaming. That's the whole purpose of wargaming, is saying, hey, we need to start building if-then statements for the day for us to engage trades around, right? So we can see that midnight open has an 84% probability. So, and that the time that it gets hit is the mode 9:30 to 9:45. So that's a check, right? And then we can see that P12 mid has an 86% probability. If it's going to get hit, it majority of the time got hit at 8:30 to 8:45. The second highest time is 9:30 to 9:45. So now we can say, yes, there is probabilities here, and we can build an if-then statement around that, right? Such as, if 9:30 opens up in here, this will represent the 9:30 candle, right? Wherever it opens up, if we sell away from it and can't step back above it, and we go way more advanced into these 4-step reversals in the boot camp, right? Then, and we start reclaiming this news candle, right? Then we can start assuming that this is going to be a great target for it to go to. However, we know that that's not the highest probable move that we can expect today, right? If we get above 9:30, if price gets above 9:30, right, or like, and can't get back below it, then we know that we have to continue find long trades in areas where we're at, whether it's using the hourly 50s or the previous hour 50s, the previous hour wicks, the previous hour lows, the 05 box swipes going Q1, whatever we can to continue to focus our trades towards buying the dips. So for me, all right, like, I'm not going to trade right now, right? I'll go over a trade. No, I won't. But I will wait for the 9:30 trade. If the 9:30 gives me a sell, right, because I do have a model that trades the 9:30 to 9:44, I'll take that trade for cash flow target, normal position sizing, right? But at the end of the day, I know that I'm in a high probability body of the daily candle, and so my job is to be a buyer today. So the only trade that I will take towards the downside is that 9:30 to 9:44 sell for cash flow targets with normal position sizing, right? And that would be my game plan. But for the rest of the day, it'll be 05 boxes, breakouts to the upside. It'll be captain back test. It'll be seeing, can we respond off a P12 high right here, right? But I'm definitely not, like, those are the types of trades I'll take today, right? One thing that I want to talk about, and I definitely will just go over this now, right? The first class, if you're coming through the boot camp, what is the first class that I taught you, and why? And then I'll pass it off to you, Austin.
Cool. Also, Justin, while people are, because we're going to have like a little bit of a latency with that question, Justin, if you're here, or even Mickey, if you guys see the chat, when I got kicked out, I can't see the chat on Restream. If you guys want to highlight what they're saying, I just can't do it.
Sure.
I don't have any.
It shows that we have absolutely zero users.
We're talking to the void.
We're talking to the void. Yeah, definitely. So the first class I gave you is proper position sizing. And I want to cover that, right? I want to cover that right now, right? So there's two types of common position sizing techniques in the retail space. There's 100 different ways. You have ATR position size, and you have all multiple position sizing, but the most common ones are two, right? We have fixed position size, right? And there's a common fallacy on how you're supposed to do that, right? Let's say a fixed position size means that you trade the same amount of contracts regardless. You don't care about the account size. You don't care about anything. You're going to trade 3 minis regardless, right? 3 minis regardless, right? So I'm going to trade 3 minis no matter what trade I take, regardless, right? And for algo-based traders that trade a specific model, that data has already been identified to account for that position size. And so do not get this twisted. I'm talking about the typical retail traders that trade in a prop manually, right? So it's going to say I'm going to trade 3 micros or 3 minis or whatever, right? Every single trade that I take, right? And then they're going to place their stop below structure or below a previous hour high, a H4 high, or whatever, right? And we learned in the boot camp, the reason we can't do that is because our stop loss will be different every single trade. We'll have an open stop loss. So to close that stop loss, where we can get more predictive value out of our stops, right? Where our stops are worth the same business expense every trade. If we're going to position size like that, we're going to figure out a cost allowance or a basis point, a percentage that our stop's going to be worth every trade. The other type of position sizing is risk per trade, right? So we're going to say we have a $4,500 account. That $4,500 account, I don't want to risk more than 5% per trade, meaning that each trade should be worth $225. And I can lose 20 times in a row before jeopardizing that $4,500 account, right? So now, how do I figure out how much position size to go in? Well, it's taking those formulas, like the account size, the risk per trade, figuring out, hey, we don't want to lose more than 225 a trade, right? And then based off of your entry and your stop, right, will determine how much position size you have, right? How much position size you have, right? So, right, that will be what if you're one of these tight stop loss traders, right? You're going to be allowed more position size, and that risk will still be 225. If you are not, if you have an invalidation that's a little bit bigger and your entry is a little bit deeper, right, then you're going to have less contracts, but you're still going to be risking that 225. Let's say we're grading the expected value of the trade setup, right? Like we're going to be able to risk more contracts based off of our position, right? So that was the first thing I taught, and I like talking about this stuff because strategy is like the least probability of how to be consistent in these markets. So right now, one thing I want to cover, and then we cover our queens, right? Statistics are statistics, right? So I took a trade this morning. I want to show you. So what's the purpose of covering the queen? So if we can get the pay the trader line, so the distance between the entry and the stop is 10 handles, right? And we know that if we want to cover that risk, aka have a risk-free trade, right? We take 10 handles, and just for some simplicity standpoints, for teaching purposes, I'm just gonna say we have a 10 handle stop, then our pay the trader line will be 10 handles above, right? Let's say we're going long, right? Now that's going to change every time. That's why we have the dump pouch, which is a free indicator that you can look up on TradingView. They actually automatically do this for you, right? Let's say we want a risk-free trade, right? So if we enter 10 contracts, right, with the 10 handle stop, 10 handles above, that's going to be worth 225, right? Because we're risking per trade. We're going to say 10 handles above, I'm taking 5 of those off, right? And then what's going to happen is, number one, your stop loss is going to decrease, but you're going to cover cash that's going to cover that stop loss amount plus cash flow, right? So let's say we move the pay the trader line to 15 handles. Your cash flow that you take out of the pay the trader line is going to increase. And that way you can actually hang on to the trade. Now, when do I do this pay the trader thing? If I'm taking a trade below 10 basis points, 0.1%, right? It's either stop loss or TP. If I'm taking a trade that's more than 10 basis points, right? It is going to be, I have to pay the trader. Like, that's it. And then we went over the rules of how to add the positions, how to, manage that trade, right? How to maneuver our trailing stop loss properly, right? For such, right? And so, like, people get scared about these news candles, right? And the data that we use in the daily profile there's nothing new about CPI. There's nothing new about FOMC. There's nothing new. Now, I definitely understand the slippage, right? The slippage effect that people are afraid of, right? But if you're position sizing the correct way, right, and you're accounting for that slippage, right, you can cover the queen. You can pre-enter, like this morning, P12 high hit. I have very high probability, right, of getting hit before P12 mid, and then candle sign supported it, right? So, like, if you enter trade somewhere in here, right, as long as you're covering that queen, paying the trader line, accounting for that slippage, right, like, this wick probably stops you out, but it stops you out without destroying you, right? Slippage only goes so far, right? So if you're trying to stack on minis, right, then we got issues, right? Like, and depending on how big your account size is, can you afford that slippage? But, like, you guys have to realize, like, there's a false expectation that, like, y'all should run away from volatility because it's a news event that happens every month, right? And, like, it doesn't make sense to me.
Say that one more time.
Yeah. So I'm going to show an example of how I did that, right? So using the candle science, right? Using the probabilities that we had, a 69% green day, P12 probabilities, higher probabilities of hitting the P12 high over the mid, right? All that stuff, right? That the pop up was going to be first, right? All the probabilities that we use, right? I'm going to show you an example. And I went to the 15-second chart just to explain it because it happened fast, just to show you, right, of how I tried to do this, right? And I got stopped out for a loss in the end, right? So right here, I started trying to pre-price for that P12 high, right? Right here in this section right here, right? I entered with 2 contracts. My pay the trader line was right up here. I covered one and then got stopped out of the other. The conditions did not change for me to be in that trade. My risk per trade did, right? Which is why I got stopped out, right? Right here, but these conditions did not, right? So I took the signature again. I entered 3, 3, and 3. And this extra 3 is just because I wanted to cover some of the slippage that I was going to experience in the CPI news candle, right? So that's something I only do for actual news events where volatility is going to spike higher or lower, right? So I'm in 9 contracts right here, right? Cover the queen right here at 5. So I took 5 of them off, right? Took an additional off right here to cover some more slippage because just in case this exact event happened where I get wicked out, right? I could account for that slippage, right? So right now, I'm in a risk-free trade from where my stop was located, which was down here somewhere, right? My stop was already paid for due to this covering of the queen. This contract allowed me to cover more slippage. So my stop was covered, plus I had cash flow from covering the queen to account for the slippage, right? So when this news candle happened, I instantly got wicked out the remaining 3 contracts, but still didn't lose huge amount of cash, right? All that stuff, right? Now, because this wasn't an extreme candle to the downside, like, so let's say I was short right up here and I did this whole thing short, my slippage would have increased because the candle would have ripped up. So instead of getting in a cover price at 25,363, it would have been 20 to 30 handles higher, or 5 to 10 handles higher, because that's the direction that the flow went instantly, right? However, right, guess what? Because I considered my position size, I considered all the effects of slippage, of CPI, of this extreme volatility event, I still was able to trade and place my bet, right? And like you can too. Like, I'm not saying if you're inexperienced at knowing how to actually position risk in the markets, right? Like, I don't recommend you doing it. If you don't even have a trade model yet, I don't even recommend you doing it, right? But if you have statistics, you've traded same thing, news event candles for years already. There's like Austin, like he used to trade the midnight open price, CPI, FOMC, doesn't freaking matter. He traded with 3 micros with a 750 cost allowance, and he would either get his 1.2 basis points or he would not. He would get his loss, and he would have to insert recovery plan. I'm going to open it up to you, Austin, and pass it over to you now. So I'm pretty sure I'm going to have a lot of critics to talk to in the chat, but this is what it is. Top the rock. On top of the rock, I could say the same thing with the 930 volatility. Guaranteed volatility. Every single day, you're going to get guaranteed volatility between 930 and 945, right? It's the easiest volatility that you're ever going to experience, right? And like I said, if you're an inexperienced trader who hasn't done the same thing for years on end, hasn't pulled all the statistics, pulled all of the edge around this, right? Yeah, absolutely. Skip the event.
Yeah.
But
and
we'll pass it off to you.
Donald Keys, you guys are saying the word trade and then placement. We're not trading CPI. That's the one thing I want to make sure we're very clear of. We're not talking about trading CPI. I'm not sure where that came from. All right. So I'm going to get into a little bit. So this is going to be pure technical here. One thing that a lot of people ask is just, what building my chart basically every single day. If you see my analysis every morning, you'll see a lot of lines, you'll see a lot of crazy stuff. And so I'm just going to start with a naked chart. So this is exactly what I start with at 8 a.m. every single day. And then we build it, right? We build it with the highest probable price movements using the daily profiler. By the way, we are at 99 live viewers. I don't think we've ever hit 100+ live viewers in an analysis stream before, right? That's crazy. So if you think this is valuable, thank you guys. And again, just hit that like button. It helps us get realistic trading out to as many people as possible. Let's get into it. So first thing I look for, number one, is I look for what is the in statistic and out of statistic highs and lows of days. In stat versus out stat, high day, low day. So somebody in the chat, what are the in statistic and out of statistic times? And while you guys share that, I'll actually put what we have on the chart today. So today we have an in statistic low of day. And then right here at 8:30, this is a news candle, in stat high of day. This is the only time when we have these news events that create these highs of days and lows of days. This is the only time that I'm looking for a potential 8:30 high of day, right? Next thing I'm looking for is, okay, where are we at within the highs of days and lows of days? Because if we know that we are day traders, all right, and then there we go. We got Dale 1800, 3 a.m., 9:30, 1600. Perfect. Twist, most common highs of days and lows of days. Market open, 9:30, market close. Easy. And so for those of you that are seeing in the chat, there's 4 just generic times, 18 to 19. This is the first major time to make an in statistic or out of statistic high or low. 3 a.m., right around London open, market open. Other than news, 8:30 sometimes creates that uptick in probable price movement for a high day, low day, and then market close. So 15 to 1600 power hour. And in these 4 major times, we get to have the process of elimination to tell us, well, which ones do we already have, right? Before market open, which highs and lows do we have locked in already? Okay, well, we have the 1800, right in the perfect time to do so. And then we have the high of day with CPI right here at 8:30. Next thing I look for is, now that I'm orientated within the daily candle, I want to see the statistical levels. And so now we're going to add the daily profiler on the chart. Boom. And you guys know, Mickey mentioned it, my one true love that I will never cheat on, I will never leave, midnight open. That's this solid yellow line you guys see on my chart right here. And then the other one is P12 mid. Now, why do I care so much about these two specifically? So the P12 mid starting at 6 a.m. has around a 80 to 85% probability. Okay. I use option. Nice. Good job, Donald. So P12 mid starting at 6 a.m. has around an 80 to 85% probability that this level is going to get hit, right? At least once per day. Midnight open starting at 8 a.m. to noon has around a 65 to 68% probability that it's going to get hit at least once per day. And so when we're above or below these levels that have a high probabilistic price movement to mean reversion, I want to see how that is with live price. I want to see where we're orientated. The next thing I look for is the opening prices 1 through 7 a.m. Now, you don't see that on my screen because they disappear when they get retraced, because CPI took them. And so obviously I don't care about them today. But if I go back in replay mode, you'll be able to see right here. So opening prices 1 through 7 a.m. If we're overextended above them because we retrace them more than we don't, and then these little probabilities you see beside these are all the probabilities that they're going to get hit, right? So like the 5 a.m. in the past 75 days, we've retraced the 5 a.m. opening price between 8 to noon 84% of the time, 73% of the time, 79% of the time, so on and so forth. So that is the second major thing I do. Again, number one, in stat versus out of stat, high of day versus low of day. Number two, statistical levels. All the levels that have relevance that we could come and retrace, do whatever. Next thing I look for is, okay, when we go into market open, how can I use the daily profiler? You guys see me flashing it on the screen right here. How can I use the daily profiler to tell me, going into market open, is market open potentially going to be a responsible party for a potential high of day or low of day? Or do we have a new potential high day, low of day? And so you can see today, what is one thing that is just glaringly obvious? Glaringly obvious. Not only have we met the short false low of day time time, all right, because 1800 is a really good low of day. We've also met the distribution. Now we have not met the time. Okay, time wise, we have a projection of around noon for a potential short false high of day, but obviously this is CPI, so that's kind of an exception. But we have met the distribution of price. So now, number three, market open. So this is where I war game different scenarios of how can market open influence my trade idea. If we move away from market open to the downside, what does that look like in terms of expectation of price movement? If we move above market open, where does that look like in terms of expectation of price movement? And this is where I build different scenarios, and I don't marry any of them. This is what we talk about all the time, where we say, do not marry a bias. This is why Mickey and I, we try to preach this from the mountaintops. When you are an intraday trader, right? We're not talking about swing trading, position trading, options, anything like that. Purely intraday trading, trading the fluctuation of a daily candle bouncing from bullish to bearish, bullish to bearish. We are trying to trade the highest probable price movement without having a bias, because this market can change on a dime. This NQ can go from potentially forming a bullish daily candle to a bearish daily candle like that. And if you've been in the market for 2 seconds, you've seen it too. So I try to be, and we all try to be, dynamic with the market. And so market open, if you just take the high and the low of the first 1 minute candle, so 9:30 to 9:31, you just take the high and the low. That's what this box is going to represent. And so If market open forms somewhere near the high and we break to the downside, well, what statistical levels, okay, right here, number 2, what statistical levels can give me expectation of price movement? Okay, so if I know that for the current highs of days and lows of days, if I know that this is a good high of day, if I know if statistics are telling me that this is a high probability, we never predict, this isn't certainty, just high probability. If I know that this can have a statistical significance of a high of day and we get below market open, well, what are we doing? We are accepting prices, just like an auction. We are accepting prices below the RTH open, the regular trading hours open. If the regular trading hours open where everybody with Robinhood and all these other places, right, you can buy stocks. You can't buy stocks overnight. Everybody in the world, the business is open at market open. If that first candle closes below, I don't care how you trade, I don't care what your perception of price is. If you get a closure below, it's just objectively accepting below. Now, can we get back up? Absolutely. But in that current moment, we are accepting below what the auction started at. And if you were to just be at an auction, everybody's like trying to bid, and then nobody's bidding anymore, you found the top, right? You found that fair value of that price. Same thing for the opposite for the market. If we're below that RTH and nobody's wanting to buy it, we're objectively accepting bearish price movement. And so if we are objectively bearish, if live price is telling us that we are closing below the RTH, okay, well then if I'm bearish, well, what's the checkpoint? Right? Because we can't just trade based on bullish and bearish intent. We have to have expectations of price. Because if I were just to go short, well, do I go short for 200 points? Do I go short for 10 points? Do I go short for 136 points? Where do I define my target? And this is where these statistical levels come in. If we're making a high of day and a time and price of potentially making that high of day, and we get below market open and live price is accepting bearish, then my expectation of price is exactly what the daily profiler lets us see. We get to see the P12 high, we get to see the P12 mid, we get to see midnight open, and we know that generically, when we get a candle closure below market open, we have a 0.1 to 0.3% positive price movement. Generically, doesn't matter any day of the week. If once this 1 minute candle high and low of the 930 opens up and creates this range, if we get a candle like this and we close below it, take a price range tool from the close of that candle and measure 0.1 to 0.3%. This range right here is positive, favorable price movement that the market open loves to make, no matter what, no matter how you look at price. This is a generic high probable price movement. We like to call this the Goldilocks zone of market open. And so how can I fit this Goldilocks zone? How can I fit this high probable price movement with what the day has? Well, if we have levels all the way down here, for instance, we took the P12 mid on that CPI candle and just exploded off of it. If we are gonna potentially retest the P12 high because this is a high of day, if we're gonna respect this high of day, then this P12 high could be that high probable direction. This could be a retest, and then we could either break through it, suck back into it, range, or come retest P12 high, then use that as support for higher price movement. So either way, I, as a cash flow trader, I'm not trying to capture this full move. I want to capture a high probable portion of this move with positive risk management. Now, the other side of the coin, what if instead of opening up the market somewhere here, we start correcting to the downside now, right now, going into market open, because we got about a little over 15 minutes till market opens. If we start opening up the market somewhere, like let's say here, like let's say we start correcting and maybe trying to get back to the P12 high and retrace back to pre-news prices, and we open up the market here, same thing, breaking to the downside, as long as there is distance, okay, as long as there is distance that can respect a cash flow target of a minimum of 0.1 to 0.3% anywhere in this area, and I can define my risk, that is an effective cash flow trade to the downside. If we break to the upside and we aren't going to respect this high of day, and we are in fact due for a new high of day at market open, the distance between where market open is and this current high of day at 830, if I can fit a cash flow movement into this move, I will take a cash flow long as well. And so just a summary here, I got a fun little image. Bottom line up front. All right, we like to say this a lot in the military, the bluff. Bottom line up front, what I'm looking for, and then I'll pass it back off to Mickey for his bluff, is if we make a high of day market open somewhere around here and a break to the downside, I'll be looking for extended cash flow shorts to these statistical levels below, which is P12 high, P12 mid, and midnight open for a potential in-stat high of day. If we open up the market somewhere around here, breaking to the upside will qualify me for cash flow longs only, just nice little cash flow longs for a potential new high of day. And then cash flow shorts just for a potential retest back to the P12 high. Mickey?
Yeah, so my bottom line up front will be the only shorts I'll be taking today is the 930 to 944. Once we get, if the 930 is above 15% or 15 basis points, my bad, right? I'll be taking it for 10 basis points lower, and then I'll be turning systems off. I'll be mainly focusing on that 4-step reversal, the 945 reversal, to try to re-engage with longs, right? Trying to stack 9, 10, and 11 for some direction to the upside. If we can't get back above 930, I'll pause my trading until we get down to the P12 mid and midnight open. And then I'll start seeing, based off the time, if we are down here, like if it's around 11 o'clock, I'll pause my trading until the afternoon session and then try to capture 05 breakouts to the upside. Trend model will be on to the upside, not the downside, and we'll go from there, right? So shorts below 930, cash flow. If we continue selling in the morning session to this P12 mid and reclaim this news candle and all that, like I'll just pause trading and then start re-engaging after we get direction of New York 2, right?
All right, guys. Well, this is like, even with the technical difficulties, we could not have timed this perfectly because we wanted this to be, anytime we do these analysis streams, we wanted to keep them about sub 1 hour. So that way it's digestible if you guys want to go back and watch it. Shout out to everybody that tuned in. I see a lot of new faces even in the chat too. So I really do appreciate you all. If you guys would like to, on your way out, please hit that like button. I don't know if it actually helps the algorithm. Everybody says it, but if it does, it doesn't hurt. It doesn't cost you a penny.
One thing I do want to reiterate, right? The trade I took for CPI today had nothing to do with CPI, but I've traded that same model. I've back tested, I pulled the edge of that model. CPI just was standing in the way of it, right? And I position sized and covered my queen and covered my wrist to account for the slippage of the stop of CPI, but I'm not going to let a regular event that happens every month, right, stop me from trading the model that I'm trading, right? But what I will do is I'll account for that event volatility and slippage when I look at my risk, for like the risk that I'm accounting for, right?
Yeah, guys, we don't look at we don't look at news days any different than any regular day. Like we have to, at some point in our trading careers, we have to come to grips with something. We either need to grow a set of balls and understand that we're here to make money and practice good risk, and that's going to involve being a little bit uncomfortable, or just stop trading, because we hear this goofy thing all the time of, you don't trade Mondays, you don't trade Fridays, don't trade CPI days, don't trade FOMC, don't do this, don't do that, don't do this. When am I supposed to trade, right? Because if we filter out all the news days that happen on a calendar that is well in advance, it is not random, it is not this side, it's not like a Trump tweet, right? This is planned. You can plan for it. You can structure for it. You can study it. This is why we use statistics, because you can go back and study statistically what,
like, is there a positive expectancy and profit factor of that trade model during CPI?
Exactly. Right? And you will find that most, really, it's just a single candle. It's about five minutes of just volatility. Other than that, trade your freaking plan, man.
That's why we position size, right? That's why we cover our queen. That's why we cover our wrist, right? Be to account for that stop and that slippage, right? We don't just stop trading the model, especially when historical data and historical trading, it shows that there's a positive expected value and positive profit factor. You just have to account for the slippage and the volatility of the stop, of you getting stopped out or it going to TP. That's all it is. Wasn't trading CPI as a collective unit. I was trading an independent model away from CPI. I just had to account for the volatility and the slippage of CPI.
Absolutely. And Benjamin Lai does bring up a really good point. Now, this is very true. Is obviously if you're trading with a prop firm like I think Trade Day, Take Profit, some of them are pretty
absolutely
sticklers on trading it. All right, guys, we are going to end it here one more time. If you guys found value in this and you're new here, we teach this formally. Here, scan that QR code. That's the PAC Bootcamp. The next class starts on January 2026. So the boot camp that you guys see starting right now just started a week ago. So the cutoff is now done. So that way we can focus on the current people. So scan that if you want to do that. And then also make sure you join
the new links, right? Just to make it clear, in case people are rewatching this, we need a new link for the boot camp, which will be getting up in the next week.
Okay, well then never mind. Just join the PAC Trade Group Discord. It is in the description of this live stream. It's also in the descriptions of everything you guys see us do. It's in our bios. It's in all this stuff. So you'll find the links in 700 different places. Hope you guys have a wonderful, wonderful rest of your day. Do not give yourselves dirty diapers on a Friday that you have to sit in Saturday and Sunday because you were chasing dopamine instead of a process. Stay grinding on your freaking goals and never let anybody tell you that you can't do something they never done themselves, like trading with spreadsheets. Have a great rest of your day.